All right, let's get straight into this. Um, yeah, market update time. I'm going to start with commodities today. Um, yeah, if you watched yesterday's recap, I pretty much called US oil to a T. Probably even better than what I had initially anticipated. Yesterday's pre-planning was, to anyone that watched the video yesterday, um, obviously we were in the London session, and pre-planning was that we would get a sweep of these Asia highs or even a mitigation, preferably both, of this supply, and then move down pretty quick. But as you can see, we got the move down pretty quickly before doing either or. Um, was this still a valid Model 2 distribution? Yes, it was. It was a valid Model 2 distribution. As I said, the only reason I didn't take it was because I wanted my Asia high to get taken first, which never did. That's just the nature of the game we play, unfortunately, which price did front run. But as you can see, it did sweep extreme liquidity, which is validated here. Just like it borderline grabbed extreme liquidity. Still valid though, like it counts to a T. And then it also did grab some form of supply, I believe, from here. Yeah, like this counts, but I normally do prefer when supply is above liquidity as opposed to below. But still a valid trade. Our two main requirements for Model 2 distributions are either a mitigation of supply or a sweep of extreme liquidity, and we did get the sweep of extreme liquidity right here. Valid entry to take. I didn't take it because I wanted that higher confluence entry where I can risk a little bit more and grab this Asia high first, which never happened, but we moved. Price still hit our technical target, but that's just the way it is. Given this, let's see what price is now doing. Obviously, I don't need to have these here because it's happened. Like, I'm not going to dwell on either of these on this missed entry. So what we can now do is draw a new range, which for the time being is this currently. This is my new range. We've obviously got our tap 1 here. I'm using the wrong brush. We have our tap 1 here, our Wyckoff high, and we have our tap 2 below us. Right here. But yeah, I strongly do recommend to watch my previous video where I do talk about oil. And you can see my exact technical analysis on it as to why price did hit this technical target, and as to why I was so confident on it. Yeah. Now, off the bat, this is my extreme liquidity. So I am not willing to. Bear with me, guys. There's a little moth in here, which is kind of distracting. There we go. We got it. We got it. I will not be entering until if this extreme liquidity gets taken. As I said earlier, that's just my requirement for a Model 2 distribution or accumulation. We are obviously now in a potential accumulation. And I do want to make a note. Let me quickly monitor for any potential demand. Demand. Yeah, you got this, but it's obviously not. Also, you can see this. Yeah, you can see this nice sell side liquidity forming here, which will probably get taken out at some point. Very clean right here. You can see that quite nicely here. Just trying to look for other entry POIs. You might get some form of small refined structure demand below this extreme liquidity. Not really, to be fair. Nothing on the one either. That's an inside bar candle, so that is not valid. Yeah, it's literally just this extreme liquidity that we're using as our POI for a potential accumulation entry. But as of now, we can see we're forming a potential distribution. Expectational order flow for me, ideally, is something like this, and we come back down, sweep this, and then reverse all the way back up to this range high. This is only what I am expecting, but obviously we trade confirmations, not expectations here. There is valid demand. Right here. That's valid. We've already got our alert set on this, I believe. Yes, we do. Yeah, and I would not like price to spend too much time up in this deviation range limit. I would like it to start coming back down pretty quick because, yeah, it starts spending too much time. It becomes a bit of a manipulation area. I wouldn't really look for PO3 schematics here. Reason being is because the range is way too low. I like PO3 schematics on much higher time frame ranges because it just builds a bit more validity to the range, if you will. Otherwise, anything low time frame is just not that clean. Like you can see here, 6 hours. Like normally, I like at least a day range for a PO3 schematic to form. So, wouldn't really be looking at this as some form of manipulation. It can be on a very local point, but I will not be looking to take any trades here. As of now, I kind of just want price to come back within this range. But if it doesn't, it doesn't. Other POIs that I can see, yeah, maybe something like 45, 30. It's another cleanest because you do have an inside bar candle there. Sorry, not an inside bar candle. Yeah, it's just not legitimate market structure. It's not the market structure that we like. Like there is supply here, but it's just not the cleanest. Even this, like, it's been mitigated. As of now, just because there's not much here, I will use this 30-minute OBIF. Yeah, like on the 3-minute, it's sort of not valid, but just because there's nothing really here, we will use this as a potential POI. Yeah, as of now, this is the range I'm monitoring. Our alerts are set. All right, that's it for oil for the time being. Let's move up to silver. And yeah, some of these I did draw a bit earlier. Contextually speaking, looking at silver, it's not the cleanest accumulation environment, just because we have some nice, some really nice lows forming here. Like, yeah, we got some very nice lows forming here. I don't need to see this because it's way too low time frame for me at the moment. But like, there is still quite a bit more supply you think would get mitigated beforehand before we flush down. At the end of the day, it's whatever confirmation we get. So whether we first flush down, maybe mitigate this structure demand here, then move up to mitigate more supply, or we just go straight up, mitigate some supply above, then move down. Anything can really happen, but we just have to see what the confirmations we get. As of now, this is the range I am looking to monitor. I do like that Asia high is the range high as well. Asia low has been swept. It's still a while until we can get some form of confirmation, because yeah, you can see we're on a 30-minute time frame at the moment. Similar to oil, I would like to see price start moving up a little bit more and coming back into this range before, as opposed to just ranging just on the outskirts of the range. Not a fan of when that happens, and it's not good for our accumulation or distribution models. In terms of demand, do we have much? Do we not have much? I'll have a look. Technically, but it's just not the cleanest, but it is an inside bar candle. Like, we might have some structure demand, or yeah, that's not clean. I'm not really interested much higher, because that's our range is kind of sitting around here. So I'm trying to see what would price have mitigated, and there's not really much. If anything, you kind of have this. It's just not the cleanest, but it's what we will use. Does it look better on the 1 minute is my question. It's been mitigated on the 1 minute. You can technically draw it like that. That is valid. It's even swept this low, so it's okay. It can be used as a structure demand. Very low time frame though, but it can be used. Did we get any reactions there is my question. We did too. Very nice. That always builds a bit of confidence to the potential of this accumulation model. Alongside this fairly decent looking return to zone. What I don't like is we're kind of forming a distribution model on the very low time frame distribution model on the outskirts of this range. But as of now, in terms of this whole range, I kind of want to just see a bit more price movement. I'd like to see price move up a little bit before anything else. Ideally, even mitigate some of this supply to add even more confluence. Well, I guess not confidence, but just a bit more confidence, because there's nothing holding price back from creating a full return back to the range high. If we can get something like this, would be nice. take out this range high and Asia high as well. Yeah, we can see low time frame. It's not the cleanest looking, but I'm expecting price to come back just because of this return to zone forming quite nicely. Very nice, and yeah, you can see exactly when the retail traders longing are putting their stop losses. So yeah, stop losses under here, stop losses under here, stop losses under here, stop losses under here. These are all most likely going to get taken. And potentially create the third tap of our accumulation model. But as of now, yeah, I'm just going to wait and see what happens. Gold, let's have a look. Gold. Yeah, I did monitor this range up until like here. Up until like here, it was looking like a decent ranging environment, not the cleanest, but valid. And what I did like up until this point is the fact that we had a really nice, and still sort of do have a nice looking return to zone, where yeah, all these sellers are putting their stop losses above here, stop losses above here, stop losses above here, stop losses above here. You get the gist. However, looking at it now, we can see that it's just downtrend market structure, which is not what we like. We like to see a bit more of a ranging environment in here, as opposed to just lower lows and lower highs. So at like right now, I'm going to take this off the chart. It's not of interest to me anymore. And look at it from a broader perspective. This is my high time frame potential distribution range on gold. We've mitigated this main supply, and we still have or have not. Yeah, we've just mitigated this refined, like borderline. We've mitigated this refined supply as well. We've left our extreme liquidity, which I do expect price to come back up and sweep. I wouldn't necessarily say I expect it, but if we are to take any shorts here, this needs to be swept first. And you can also see, once again, as we're on the topic of sell side and buy side liquidity, this looks beautiful. Like on the average retail trader looks at this, they just see, oh wow, we're in a downtrend. Prices, prices going down, and like everyone's gonna, we're gonna keep shorting it. This pair's gonna keep doing this, but that's not how it works. What I see when I look at this is retail traders looking at this as if it is a downtrend, which it is on a very local time frame, and people are shorting, stop loss above here. Shorting, stop loss above here. Short this break of structure, stop loss above here. Short a local break of structure in here, stop loss above here. And what's the market maker going to do? Keep going, keep creating these stop losses, and then when it's in the mood, it will just bang, take all these out, take this high, and then return and pump price back down, or flush price back down. It's the correct terminology there, but yeah, that's how I see this pair, or that's how I see like charts in general when looking at them. Let's get rid of this. So yeah, I've got my alert there, and yeah, my thought process was catching an accumulation model up into the extreme liquidity of this higher time frame distribution model. That was my expectational order flow, which hasn't happened just yet, but yeah, I'm expecting price at some point to reverse and take out all these stop losses, sweep extreme liquidity, and then move back down. Yeah, for now we will wait and see what confirmations we get. Can this be a range for now? It can. Not the cleanest, but it can. Yeah, this is what I will be monitoring on gold for the time being. Got my alerts there. Yeah, anything here locally is just too local of a move to expect pumps. I like a much more higher time frame ranging environment to be created where we can move up into this extreme liquidity, sweep it, and then move back down. But that is gold for now. And you can already see from a high time frame, it's not the cleanest, but you can see how we distributed to create this high time frame range, which then accumulated to create tab 2 of this high time frame distribution, which started from this lower time frame distribution. So you can see everything in the charts, guys, is distributions and accumulations. That's all it is, and your job is to catch them. All right, that's it for commodities. I've got all my alerts set. Let's go to Euro USD. Yeah, this is kind of a accumulation which turned into a potential distribution. This kind of was a distribution, yeah, you can see that pretty evidently. That's not where I want it, no. So yeah, we can form you can see we formed a little distribution here. What am I seeing here? Yeah, this is no longer really a range I am looking to trade. Hence why I'm going to get rid of all this. And as of now, this might be my ranging environment, but it's not an official range yet. It has not been confirmed. A range will only get confirmed when we touch EQ, which is not yet happened, but not really. You know, I'm not going to chart this yet. We do have some clean demand below us. We could potentially accumulate here. I wouldn't really rely on it, but it could happen. The only thing I don't like about this is that we've taken both Asia high and low. So when trading Forex, I normally like to see either Asia high or low not yet taken, because it's definitely a very good liquidity target. Whereas now, given they're both taken, it's not as enticing to look for potential accumulations. Even with this demand below us, it's just not. I don't trade that way, and it's not something I would like to do unless there's just lots of other confluences going my way, and I'm like, yeah, this, even with Asia high and low taken, I can still see price reversing up to this pre-London high, which isn't really a clean liquidity target pre-London highs. Yeah, that's kind of it for Euro USD. I just want to see some more price action. Let's move on. GBP USD. We have entered this rectangle. Yeah. All right. We've filled this CME gap. We have mitigated supply. We've got this 4-hour OBIF below us. And outside of that, there's not much else where price could potentially reject from. The only other place I can see price rejecting from is around here. But I just want to see a bit more ranging price action occur. US oil as well, already entering this I don't mind this so far. Creating this, hopefully we can create this nice liquidity target. Something like that. And then come back down to sweep this extreme liquidity. We will stay monitoring that. But yeah, I'm not, like, this is technically speaking a range for now, but it's not clean, it's not beautiful. I'm going to wait a bit more to see what price does. And then from a higher time frame, building context perspective, yeah, we can look for accumulations. We definitely can. There's definitely a lot of buy side liquidity up here, as you can see. So yeah, we can look for accumulations to bring price back up to this extreme liquidity target. So given our context, I will still monitor this range just in case we get some form of accumulation forming. Yeah, you got to give price a bit more time here. All right, AUD USD, let's have a look. Yeah, shout out to me for predicting this accumulation, but not shout out to me for not entering. Yeah, nothing more can be said. Yeah, great trade to have taken, but I just did not pull the trigger on it. Well, I can get rid of all this now. Technically speaking, this can be a range. We've also got all this supply, which we're pretty much hitting. Is this valid? Yes, it is. Did it get mitigated potentially? I think it would have. We've also got we've got a few refined I'm going to use this for now for our OBIF, which is valid. And we have, mitigated this to a T, pretty much. We do have structured demand below us. So as of now, I'm pretty much looking for local distribution models that can come back into this. They can come back in and mitigate this demand. We do have this 2-hour OBIF as well. But yeah, ideally we're looking for distributions here from a very local standpoint. Meaning this is my current ranging behavior on AUD USD. And this is my extreme liquidity. Honestly, technically this is going to be my extreme liquidity just because this is a bit too high and it has swept this previous high. So this will be my extreme liquidity. Return to zone is not the cleanest, but if we get a slow uptrend up into this extreme liquidity POI, then we could be confident enough to short. I'm just trying to see if there's any supply. And yes, there is. I like this. I really do. even a very local distribution model in here, it's probably not the most valid. But so far, the ranging environment in AUD USD is indeed very interesting, and also, yeah, from a contextual standpoint, we're in a area of high supply, so we can expect rejections. And yeah, not to mention our volume profile. Come on. Not to mention our volume profile. Wink, wink, nudge, nudge, volume profile. Non-existent. That's all right. Well, I don't think I can show you guys volume profile now. All right. Gonna have to redraw this. All right. Not to mention our volume profile. Attempt number 3. Yeah, it doesn't actually show a range inefficiency as to what it does, but it shows a range inefficiency the opposite. So from a volume perspective, it's not the cleanest setup. This price did spend quite a bit of time below in the discount area of the range, but yeah, if we can get a very slow move up and sweeping this liquidity, if we even respect demand supply even better, then I'll have enough confidence to short this. But as of now, I am just being patient and seeing what price decides to do. That's it for AUD USD. Alerts have been set. All right, USD CAD. Yeah, not much happening here. We're still kind of waiting for this mega distribution schematic to complete itself. Price is somewhat compressing. We can see that here. So yeah, somewhat of a decent compression forming here. Most likely just based on how this range is set itself up, we're probably going to expect a compression to the downside. Whether we respect this mitigation, this demand, I am not too sure. We're just going to have to wait and see. But for now, yeah, just being patient with this. It is technically valid. Structure supply, yeah, it is. Decent overlapping structure supply here, guys. Wow. This is nuts. This is actually crazy. Very clean structure supply. So far, not one mitigation. Okay, we've mitigated on the 30. Yeah, it's definitely been mitigated on a lower time frame, but I'm going to leave this here for now. But yeah, USD CAD, not much else to look at. We will move on to GBP JPY. We are running through supply here. This range is officially invalid now, so is the demand. So is this range, so is this POI. Ran through. Yeah, technically speaking, we're still within our potential tap 2, but I would definitely pay attention to a potential PO3 schematic here. I actually quite like this from a PO3 schematic perspective. Let's just see how long we've been ranging for. 13 days, yeah. I really like this. So this is my range. This is my manipulation area. And then this will, or thereabouts, could potentially be my expansion area all the way back down. So we can plan for something like this for GBP JPY. And I'm going to set an alert here. Yeah, obviously with pair 3 schematics, they're a bit different to standard distribution and accumulation models. So if we can get just one single deviation here, being our tap 2, and a break of structure, then that is enough confidence for us to enter, given we have a nice return to zone, which so far we kind of are having. So if we continue to do this, sweep, break structure, that is me entering, and I will be targeting this full range low. But for now, we can only look at confirmations, but this is our pre-planning for the time being. So we will see what's going to happen here. Inside bar candle, so not valid. That's an inside bar candle as well. Yeah, it's just not really seeing any clean supply in here. I have to get out the the scissors for this one, guys. This is valid. But is it mitigated on a lower time frame? It's mitigated on the 10, but we can still use this. Like you can see, you got some supply here. Not to mention we have just taken this high. So yeah, these are not equal highs by any means. And we've mitigated this supply as well, so this is definitely shaping up to be a potential decent looking P03 schematic. Yeah, I really like this. Really, really like this. All right, that's it for GBP JPY. Alerts have been set. Let's move on to GBP NZD, which is what we got stopped out on yesterday, unfortunately. Plan remains the same. If we can create a local distribution, or even just mitigate this and create a clean and convincing break of structure, then I will re-enter. Or yeah, I will attempt to make my second attempt at entering. Just because I've been stopped out once doesn't mean like this trade is over or this opportunity is over. But yeah, this is all I'm monitoring for now. Not much more to do here than just wait and see what price does. What I also do like is that we do have Asia highs and Asia lows at either end of this range. So a distribution can be favoring us. So yeah, nothing more to do here, GBP NZD, than just practice patience. All right, Euro GBP. All right, I like this. The only thing I don't like about it is the fact that we have moved down quite aggressively. Therefore, I would not be looking to enter unless it is a fourth tap, just because of all this supply above us. So yeah, as of now, I will wait and see how price reacts from mitigating this supply. This is valid demand. Fairly decent demand, to be fair. However, I am curious as to where it was. That's pretty good. Obviously not going to put an alert on this. But yeah, for Euro GBP, I would like some form of a retest of this supply, then slowly come back down, and then a break of structure up, where that can be our 4-tap model. Because yeah, unlike the previous pair, but if we get our range, our volume chart here, you can see a very, very obvious range inefficiency. A lot of dead and empty space here, which can get filled. So this could be a perfect accumulation opportunity if we stay prepared and stay planned and plan well. So yeah, patience for now. Alerts have been set. Euro NZD. Was that 45 minutes? It was a messy 45 minute, I think, or was it a 30? Yeah, definitely not the cleanest looking supply here. Yeah, this was a... Yeah, it's not that clean. It's valid, but it's not clean. Only 5 minutes. You can see here, yeah, this could be a potential entry. We have our Model 1 accumulation with the test to shake out anyone that's longed off here. Do we have demand in there, which we respected? Given there is demand right here and right below us and it hasn't been mitigated, if I do, hypothetically speaking, enter of some form of demand in here, I will have to put my stop loss below here. And we do have demand here, which will get mitigated pretty surely. Or, yeah. I wouldn't mind this to get mitigated, this demand coming off the test bounce. It's just not the greatest. It's just not the greatest entry. Alright, we'll monitor this. For now, I believe I have charted this up. Nothing I want to do here until we see price come back into extreme liquidity down below us. And this could shape up for a potentially really clean entry, as well as a just overall nice accumulation model. As annoying as it is for it to be here, this is technically demand, so we do have to have this on the chart. As I always say, I do much prefer it. Yeah, it's a lot cleaner when extreme liquidity is above extreme demand, but on this instance, it is below it. Right, that's it for USD against the Swiss franc. I'm not really interested in anything else from a local standpoint. USD JPY. Is this valid? No, it's not. No, it is not. Yeah, it's way too market structure like, as opposed to a nice clean ranging environment, which is what we much prefer. There is also quite a bit more supply above us, which if you were to play it safe, you would be really looking at this range as a whole. As opposed to the much more refined range. Like, this just looks a lot cleaner. especially if we continue to deviate this and we continue to climb high, then you have to look at the higher time frame range as opposed to this slightly smaller one. Yeah, I'm kind of just going to wait and see what price does, because yeah, you can see the supply here has already been disrespected. Yeah, I'm just going to watch this bear for a bit more before making any decisions. AUD CAD, we've ran through this. Yeah, this is definitely my favorite pair over here. I haven't traded this yet, but I'm just looking at it. A potential distribution forming here, but we will wait and see what happens. This is a valid extreme supply. All right. And yeah, nothing really ends at CAD at the moment. Yeah, I'm kind of expecting these lows to get taken out. So yeah, not really interested in trading NZCAD at the moment. That's kind of it for today, guys. Hopefully you've taken something useful from watching this. Yeah, my key. Obviously, this one's the US dollar against the Swiss franc will be an interesting one to monitor. And then we had Euro GBP as well, and then GBP JPY as well for P03 schematic. So a few potentials here. I'll monitor these, and I will keep you guys updated. Thank you so much for tuning in today, and I will catch you guys on the next one. Oos.